Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The US markets were closed on Thursday for Thanksgiving, which has pretty much given much of the markets a slightly consolidating pattern in the wake of the US Federal Reserve minutes that revealed that most officials expected to see a slower pace of interest rate increases, which now has given some talk that the market may see a 50 basis point rate hike in December and not a 75 basis point. With that being said, the Fed has raised interest rates by 75 basis points at each of its last 4 consecutive meetings, which was in June, July, September, and November, which has taken their benchmark rate by 0 to 25 in March to current rate of 3.75 to 4%. Looking at the Australian dollar, the market is still very much focused at this point on the top side of around 67.7080, which is now about to be contested. A break there could see an extension up towards 68.45 and reassess from there, because it would put the indicators in terms of the RSI slightly overbought and could see a little bit of profit taking, as we did see that when we were last contesting this level, which was at the beginning of this month. The euro at this stage still remains relatively bullish as it looks towards the 105 region, with the dollar index, which measures the greenback strength against a basket of 6 major currencies, slipped further on Thursday early, and that is at 105.77. Still, with the expected rate decision in December to be around 50 basis points, global markets are still looking at, should be looking to the November CPI reading next month, and therefore could gauge whether the inflation is continuing its slow retreat. Any pullback for euro, I view the market should find support roughly around the 103.25 area and reassess from there. The dollar yen was weaker overnight and still heading on track, that is, to the target of 136.4580. We're getting close to that region, and do be on your guard as we could see some profit taking or even see the market rebound off that level, as it was the start of the uptrend earlier, that is, in August. Looking at the pound, the market is cleared the 120 level and now looking towards 122 as an extension. Do take note though, if we do see a break of 122.65, it gives the bullish call up towards the region of 126 as a potential target. So a keen level for the bulls to take on and challenge, and keep an eye and see if we can break 122.65. Any pullback should find support roughly around 120.35 for an intraday view. Gold, well, the market's still holding to its gains since the rejection of 1,726, but still having a little bit of trouble here at 1,756 to 60. However, I still feel the technicals are holding to a relatively bullish when you look at the RSI, so therefore could see a clearance and then follow on towards 1,778 to 80. And wrapping up with oil, the market is still maintaining a slightly weaker stance, but with the US being closed, we can see that the prices have hardly moved. Nevertheless, the market is still destined, I feel, to take the challenge down towards 74.80.95 and reassess from there. Well, that wraps it for the week. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the new weekend.